At the end of the day, the number one reason that we don't really want to talk about it is there isn't a solution at this point that won't involve some pain. And we can't talk about pain. We're not allowed to admit that someone's going to have to eat some spinach.
Welcome to Acton Line, a product of the Acton Institute for the Study of Religion and Liberty. I'm Eric Kohn, executive producer. This episode of Acton Line is becoming an annual tradition at Acton University, where I sit down with our good friend and Acton Institute board member, David Bahnsen, to discuss the current state of the American and global economies, where inflation is at, the role and performance of the Federal Reserve, and other economic potpourri with David, a financial expert. This episode was recorded live at Acton University 2024. Acton University is Acton's flagship conference, focused on building the foundations of human freedom and exploring the intersection of faith and free markets. To learn more about Acton University, please visit university.acton.org. And to find additional content from previous years of Acton University, including talks from David Bahnsen, please visit ondemand.acton.org. That's ondemand, one word, .acton.org. David Bahnsen is the founder, managing partner, and chief investment officer of the Bahnsen Group, where he oversees the management of over $5.7 billion in client assets. Prior to the launch of the Bahnsen Group, he spent 8 years as a managing director at Morgan Stanley and 6 years as a vice president at UBS. He is consistently named as one of the top financial advisors in America by Barron's, Forbes, and the Financial Times. He's a frequent guest on CNBC, Bloomberg, Fox News, and Fox Business, and is a regular contributor to National Review. He hosts the popular weekly podcast, Capital Record, dedicated to a defense of free enterprise and capital markets. He is a regular lecturer for the Acton Institute and the Center for Cultural Leadership and writes daily investment commentary at thedctoday.com and weekly macro commentary at dividendcafe.com. David is a founding trustee for Pacifica Christian High School of Orange County and serves on the board of directors for the Acton Institute. He is the author of several best-selling books, including Crisis of Responsibility, The Case for Dividend Growth, and There's No Free Lunch, 250 Economic Truths. His newest book, Full-Time, Work and the Meaning of Life, was released in February 2024. David Bahnsen, welcome to Acton Line.
Well, good to be with you again.
So last time that we talked was a few months ago for our Business Matters conference, where we talked about your book, Full-Time. So it's been out for a while now. You've been doing a tour, promoting the book. How has the tour and the reception of the book been?
It's really been remarkable, and I've really enjoyed talking about it at Acton during University Week. We had a wonderful session where it's a nice audience in the Acton world for the book. There's a certain receptiveness to the theology of it and the way it integrates with a certain economic worldview, so it's kind of a compatible mix. But overall, I have been very pleased that even folks that I expected would be critical, push back, have been at least open. There's been questions, and there's a need for follow-up on certain aspects. I'm already very inspired for what I think the kind of part 2 of the book needs to be. But I'm very encouraged by the reception to the book and hopeful that in a whole plethora of audiences, it's having an impact.
What has been the most interesting critique or pushback that you've received on the book so far?
I don't think that what's most interesting has been a critique or pushback. It's been questions. The assumption that perhaps what I'm stating in advocating for a very robust view of work is that I'm limiting my definition of work to a paid vocational careerist context. It's a fair assumption because very purposely, the focus of the book was in the realm of vocational careerist work. But my definition of work and the broader philosophical points being made in the book most certainly are not limited to the category of compensated work. And so people asking where, for example, stay-at-home moms might fit in, or where certain types of volunteerism may fit in. It's a fair question that's allowed me to elaborate, yet still within the context of my vision for a productive and useful and active life.
Well, looking forward to part 2 whenever that comes out. So we're going to continue our tradition here. As David, you mentioned, we're recording this live at Acton University 2024. And the last 2 years, I've had you here to talk about what's the state of the American economy. In particular, you've been sending out for a while, starting really in the wake of the pandemic and when inflation started spiking, these very helpful updates on inflation and what we're seeing in the economy. Let's start there. Where are we at with inflation right now? And feel free to expand that out into the general state of the American economy as we're talking here at the end of June 2024.
Yeah, when every single price level, more or less, is dropping, and going negative in periods where that happens, we know it's deflation. And when every price level is going higher at once, we know it's inflation. And when you get to a point where all of a sudden, like, certain things are up a lot and certain things are down, and it's a very divergent response, that's where the conversation about inflation necessarily has to change for people who are being economically cogent, because you can't. The definition of inflation is a broad-based increase in the price level, and you can't have inflation where you say, well, apparel prices are down 7%, but insurance is up 20%. So insurance prices inflated. But that's not what we mean in the economic context about inflation, and that's where Milton Friedman's teachings are so important. It's the broad-based result of too much money chasing too few goods. Money supply is contracted 2 years in a row, which is simply stunning that money supply has gone negative and we haven't had more recessionary results. But yes.
Why do you think that is?
I think there was a glut of extra money floating around, extra savings, and then I think that that's been largely spent up. I think in particular 2023, a very underrated story that I need to do more work on was the preposterous employee retention tax credit that was one of the biggest examples of grift in public finance history. And that there were things like that were still kind of offsetting the norms. But the biggest reason when you get to the Fed tightening that it didn't hurt more is the Fed raised rates and nobody paid them. That by and large, mortgage rates are 7%, and the average mortgage rate being paid is 3.6%. The corporate bonds right now for a good, what we'd call an investment grade corporate borrower is about 6.5%, and the average corporate bond rate being paid is also in the threes. Everybody was able to borrow money at low rates prior to the Fed tightened, and they haven't had to, for the most part, go borrow money at higher rates. And so that tightening hasn't had the same impact it normally would have. But to answer your question on inflation, I believe it's very obvious that there's a divergent result right now across certain categories. And therefore, divergence in categories means each category has its own explanation. The disinflation of an annual year-over-year rate going from 9% to 3% has been well baked in. The Fed will end up taking all the credit for it. We tightened rates, inflation dropped, therefore inflation dropped because we tightened. It isn't true, but it's inevitable because we said that they caused the inflation, therefore we said that they get to cure the inflation, and I disagree on both counts. I think that the supply chain related issues have mostly been cleared up, which is why a lot of the price levels came down. But then there are still some areas that aren't totally fixed since COVID. I know, as you mentioned, my new book, dealing with my publisher and just happen to have some investments in that space personally, I'm fascinated by the book publishing world, for example. Hardback books still are taking months longer than they used to. There's certain things that aren't totally cleaned up, and we do continue to suffer from a shortage shortage of laborers. There's a lot of political reasons why we're not real keen to have immigration solve some of our labor shortage, and we still have a low labor participation rate in our country. So that impacts things. But the notion of it being the big government spending, or the notion of it being the Fed's easy monetary policy, both dynamics that have been happening in spades for 2 decades, not 2 years, and yet we had 18 months of high inflation. I think that it's rather obvious at this point that the theory of the case I had a couple years ago has been validated, and that what we are dealing with right now is a return to pre-COVID normalcy, whereby we have subpar economic growth, not, an economy running too hot.
Go back to the Fed for a moment. I think the way you would put it is that they get the blame initially for the problem with inflation, and then they take actions that may or may not have a serious impact on fixing the problem. Other things, events intercede, but they'll get the credit for the improvement. What concerns you the most in that becoming the dominant narrative of what has happened? Like, what would you fear that would open the door to, or that misunderstanding would incentivize kinds of actions in people if that is the story they're taking away from this?
Yeah, I would love for it to only be hypothetical. I don't think it's a what if that happens. I think it's happened, it's happening, it will continue to happen. And it's more than just the Fed getting credit for it, which is bad enough. But I honestly believe that there's been a sort of latent deification of the Fed by some who have not intended to do it. But that's the result of, if you set up the Fed as the cause of a problem and then implicitly set them up as a solution, there's this belief that the Fed has hands on the levers of the economy that they don't have, and it plays into that narrative. The worst thing that can happen from it, that I worry about all the time, that is happening, it is baked in, and it has to change, and I don't know how to change it, is essentially a reaffirmation of central planning on the monetary realm, that there are people who possess a certain level of knowledge they don't possess, that have a certain skill they don't have, to go about setting the price of money, setting the level of money supply, and all sorts of other creative interventions in the way monetary policy is administered that can effectively improve the business cycle. Make things better when they're not good, and make things, cooler when they're too good. That belief about a central bank is untrue, and yet we not only right now are at a point where we believe it's true, we need to believe it's true. We want to believe it's true. And so when some of my friends who were very critical of Fed monetary policy, essentially, Eric, this is what happened. For 20-something years, the Bank of Japan had the easiest monetary policy in history. For 15 years, the Fed had the easiest monetary policy in history. No inflation whatsoever. Then we have very easy monetary policy out of COVID. You do end up having inflation. They go, see, look, we told you so. You're wrong 99 times. One time the broken clock goes and you say, see, I told you. But
that was always my joke about listening to Ron Paul, that he had predicted 20 of the last 3 recessions.
That's right. I think in Ron's case, it was more like 30 of the last 2.
Yeah.
But the point is still very similar. And it's true of a lot of the sort of sociology of doomsdayism. And it's especially true, by the way, of the Fed. But even like critics of big spending, one of the things that's very hard for me, and I want to try to stay focused, but this stuff just gets me really going. So now I'm fired up.
Go for it.
I could say that Bush, Obama, Trump, Biden. How can I be more bipartisan than that? I just had 2 presidents that were Democrat, 2 presidents Republican. All spent like drunken sailors, and that we saw the national debt go from roughly $5 trillion to roughly $35 trillion. That's a lot of money. And that we didn't have any inflation throughout it. And then at the end, after they shut the world down and there was no supply of goods and services, prices shot up. And I go, I don't know. It doesn't seem to me that Occam's razor is such here that excessive spending was the direct cause. That's not to say on the margin there was an impact and it didn't make things worse and there couldn't have been a sugar rush from direct transfer payments. Those things are never sustainable. Giving people $2,000 to go spend does increase velocity for a minute, and then it doesn't. And all that to say, it wasn't ever the most logical explanation relative to shipping costs that were up 2,000%. And almost complete, not even high shipping costs, but no shipping at all, semiconductors that were so vital into car prices, for example, or appliances. So now what we did is said, see, all these things that we do agree with, we want sound monetary policy and we want limited government spending. And someone like me says that those things being violated were not the cause of inflation. And that can be taken as me saying that they're benign. But they're not benign. They're horribly corrosive. But I would argue that they're corrosive in facilitating economic instability and downward pressure on growth. But the implicit message of the other side was, oh, they're horrible. They're making the economy too hot. What are we going to do? Everyone has a job? And so we got this narrative that the right was playing into that I never thought I'd see. People saying, oh boy, unemployment's only 3.5%. That's not good. They're going to have to cool this economy down. We need a lot of people to lose their jobs. As if people having jobs was a cause of inflation. It's just completely outside of my economic worldview. A lot of it was political. And not just political in a malignant sense, but a very understandable and rational sense. If I were a campaign strategist for Trump right now, I'd be hitting Biden over the head with inflation. Do I think that Biden doing the spending that Trump himself wanted to do first is what caused the inflation? Not really. But I guess in a campaign political world, I can understand pretending so. But
I had a friend who was a longtime campaign consultant who wrote a piece years and years ago that he got a lot of flack for. But he made a point in there that is true for the perspective of those kinds of consultants, that the job is, he says, never to be dishonest. Now, that may have changed since the time that he wrote that. But from his perspective is you tell the version of the truth that is most beneficial to your candidate in that moment. You, by definition, have a very short-term perspective because an election happens and then that job is over and your job is to get across that finish line, not to have this bigger picture, long-term perspective that actually hopefully builds some kind of understanding in the electorate of what caused these problems, what is the nature of these problems, and what do we need to do about these problems now?
I view that a little bit analogous to like a defense attorney, that two things can be true at once. I don't think I could do it, but I don't think it's wrong. Like, I think a defendant deserves a vigorous defense, but I don't think I could actually do that. I think a campaign consultant has to go say when the economy's good, under President so-and-so, the economy's booming. But if I believe that what we're doing is creating an imperial presidency, I would be uncomfortable with it. But I don't think it's intrinsically dishonest. Under President so-and-so, this got good. That could be true.
It's true. It always implies this kind of control and cause and effect there that is just way more complicated than that. And it's always hilarious to me because you never want the inverse of that, right? When things are bad and it's your guy who's been in office, it was like, well, he's not fully responsible for all of this stuff. And it's the most convenient argument to hand approach to handling these things.
But how do you break the cycle? Right. Someone has to be willing to do what the other side won't do, and they're not going to do it. So for someone like me to go make the argument that presidents get too much credit and too much blame, it's actually equally distributed in its fairness, right? Look, I absolutely adore Ronald Reagan. I grew up in a Reagan presidency. I could sit here and cite chapter and verse the things I think he did to make the world a better place. But he gets way too much credit for what happened in the economy there. But that's just the kind of nature of the reality. And then people get too much blame as well. the fact of the matter is that there's things happening in the business cycle, there's things happening in global geopolitics, and there's things that just have nothing to do with presidency whatsoever. The internet revolution taking off in the 90s was not exactly a byproduct of Clinton, but I'm not trying to change reality. People are going to associate good times with who's in office, and they're going to associate bad times with who's in office. It's when you get into the specifics of things and you say, the jobs report does not come out. And people say there were 200,000 jobs last week. They say Biden created 200,000 jobs. And I go, come on, you just can't be serious. What did he do last month? What was the change of policy? What was the catalyst to him creating it? And then likewise saying that Obama created. Now look, the left would never extend the courtesy to a Republican president that I'm trying to extend to a Democrat right now. So I get it. All is fair in politics. I'm just saying I couldn't do that job.
Yeah. I read a report, I think a week or two ago, that the debt to GDP ratio is, for the United States right now, is the highest that it has been since World War II, and remarkably high for it not being a period of wartime. How concerning should this be?
Should be the only thing we're talking about. Now, it isn't true. It was higher a couple years ago, right after COVID. What happened in 2020 into 21 is debt went way up and GDP came way down. Now, debt has still gone up, but GDP has come up a bit. So the ratios mildly improved the last 2 years, even as the absolute debt level is substantially worsened. And then, you have to go back to World War II. But no, there's absolutely no question. It was the focus of a big talk I gave here at Acton this year, and it was, I think, the third year I've given it, and you get to update it every year. And I'll be honest, it's very depressing updating my annual Acton talk because each year the slides only get adjusted one way. But it is the biggest economic issue that faces America. Is we essentially, I say this all the time, I was one of these Republicans in the early 2000s that was very critical of President Bush Jr. on spending. And he did more or less, just to use round numbers, come into office with $5 trillion of debt and leave office with $10 trillion of debt. But the debt to GDP ratio was the same. So even though the No Child Left Behind, Medicare Part D, the Iraq and Afghanistan war, there was a lot of spending, he more or less, the economy grew in tandem with the debt. The issue that has changed at the point of the financial crisis, by the way, whether it's Bush or Obama, I'm just using them as markers of timing, not cause and effect. The issue that changed is the growth of debt outpaces the growth of GDP. Nonstop since 2008, essentially. That's why the debt to GDP ratio has skyrocketed. So you mentioned peacetime and also economic expansion. We haven't had a recession. So it went from 66% to 78% before COVID in period of pretty robust economic expansion. That was during the second term of Obama and President Trump's term before COVID, up to 2019. That's the more inexcusable period, in my opinion, because again, having GDP growing and debt growing faster than it when there's no Keynesian explanation for it. I'm a big critic of Keynes, but I think Keynes would be spinning in his grave at what has happened there. And then, of course, since COVID, it exploded, and now here we are, and there's no appetite to do anything. And you could say, okay, well, this sounds really bad. You asked about a debt to GDP ratio, but on a go-forward basis, it isn't like we're talking about improving it. All we're talking about is how much worse we want to make it still. $1 trillion per year worse, $2 trillion per year worse. So it seems to be that they're settling on something closer to $2 trillion per year. So that $34 trillion will get to $50 trillion of debt very soon, and that's assuming no recession. At some point when you have a recession, it gets far worse because then GDP collapses as well. So I think it's a huge deal, and it's the economic story of our day, and it has everything to do with its impact on growth. And the idea that we're worried about the economy running too hot when we're running at such a subpar structural growth rate, I think is terrible.
You said it should be the only thing that we're talking about, but of course it's not the only thing that we're talking about. There's a lot of other things we're talking about, but I kind of long for the halcyon days of at least when this problem seemed bad, it was a central issue, Tea Party era and that kind of thing. It has really fallen off. Why do you think that is, that it is this enormous problem out there and we just refuse to have a conversation about it? And when you mention 35 trillion, I always wondered, this takes me back to when I ran political campaigns in Cook County, right? And one of the issues we always wanted to try to make serious for people was the issue of corruption in Chicago and Cook County politics. And the problem that we always encountered was no matter how wild or salacious or awful the story was, the reaction from most people was generally the same. They would read it in the paper and go, what's for breakfast? Like, they just move on from it entirely. It's just kind of an accepted state of nature. Why don't we focus on this problem? Are we just in denial? Or when we start talking about numbers like 35 trillion, for a lot of people to just become too hard to comprehend? And so we just kind of like, it'll work itself out and we move on.
There's a number of things there. And I want to start with one of the ones that is most important in my life, both in my past life and in what animates me for the future. One of the biggest problems to that apathy, that complacency, being numb to really significant facts and problems, is the false prophecies and apocalyptic doomsdayism, newsletter writing, the sky is falling, go buy gold sociology of our movement. We did this. We were wrong over and over and over again in the 70s, 80s, and a whole lot of people heard the world was going to end when we had 100 billion of debt. And it's very hard for them to believe it's going to end with 35 trillion of debt. And a whole lot of them were told, get out of the stock market. It's crazy. Go buy gold. And the stock market went from 800 to 40,000. I'd be very resentful at the conservatives who told me that too. And that's a lot of people. And so I think there was a sociology on the right that hurt credibility. But you're really talking about just regular people out there that probably are not tied in directly to what I'm referring to necessarily. But what I would say is that there is a law of large numbers where 35 trillion and 10 trillion don't seem that different. Now, one line I heard this week at Acton I loved was, what's the difference between a trillion and a billion? Well, it's basically $1 trillion. Right, I mean, a billion divided, it's a $1 trillion difference, and we think a billion's a lot of money.
Yeah.
And there's a whole $1 trillion difference between it. But that's why the debt to GDP ratio matters. Now, by the way, when I say this is all we should be talking about, see, what I'm saying is we should be talking about Social Security because that's a part of this. We should be talking about Medicare. That's a part of this. We should be talking about the size of government we want to have. We should be talking about revenue. There's also, and when people say, well, what about grocery prices? But see, the things I want to do to stabilize prices, the things I want to do to spur economic growth, they are all directly connected to solving the debt problem too. It's a pro-growth agenda that starts with right-sizing government, which then becomes more fiscally responsible. Eric, at the end of the day, the number one reason that we don't really want to talk about it is there isn't a solution at this point that won't involve some pain, and we can't talk about pain. We're not allowed to admit that someone's going to have to eat some spinach.
Your Dividend Cafe podcast, you had one recently on AI, on artificial intelligence, and how you at the Bahnsen Group are thinking about it in terms of investment, as well as, I want to ask you about its implications for the economy writ large. But how are you thinking about the development of AI, where it is at right now, its utilization in the economy, and where you think this goes in the future?
Yeah, a lot of that in dividendcafe.com and in my own thinking is necessarily connected to the investment apparatus because of that being what we do. And I have been just fascinated with the correlation to internet development in the second half of the 1990s, where right now everyone's talking about AI, and they still can't give me an example of a company that's making a bunch of money by using AI or doing AI. They're all talking about companies that what I called in Dividend Cafe are the backbone of AI. And that was exactly what was happening in the 90s, that essentially there was this huge increase for a good reason in the enterprise value of the companies that were making the backbone of the internet. And that could either be telephone companies that were going to deliver broadband or wireless, or cable companies, and then of course the hardware companies that were going to be making the network equipment, servers, routers, switches, et cetera. And so right now the equivalent here, you have your NVIDIAs and whatnot that are just seeing real order flow, real revenues, and have had earnings explode, and then have gotten priced as if that will continue at the same rate for like the next 30 years. And so I think there's a big analogy between the backbone of the internet in the 90s and the backbone of AI now. And what they have in common is, yeah, there are some companies that ended up just going away, that they were just wrong, they were a joke, and yet really the worst stories are ones that didn't go away. They flourished. They made tons of money. It's just that it was so overly done that when that bubble burst, everything came back down to earth. A lot of people don't remember Microsoft stock in 1999 and 2016 was the same. Cisco's stock in 1999 to today, it's still about 40% lower than it was 25 years ago. And you go, oh, well, they must have just really fallen off a cliff. No, they've grown earnings every single year. It was just that overpriced. But then you get into the delivery of AI and where there's actual monetization of something. Well, yeah, most of the .coms that were the internet actually did die, go away. They never had a revenue model. But the Amazons made it big. The eBays did pretty well. Search engines didn't kind of come to later. Most of the search engines in the 90s all died. They didn't have a great revenue model. Yahoo's now in the graveyard, but there were a bunch.
We can't really ask Jeeves anymore.
No, and there's others people wouldn't have even heard of that were a big deal in 1997, and now they're like the MySpace of search engines, you know. But Google didn't even go public until 2004. So there's just a very limited number that made it, but they made it big. Well, who are the companies that will be utilizing AI? That, to me, is the big story. And it's more or less, I think, going to be a whole lot of companies, but marginally, that use some form of predictive AI already and then generative AI into the future to improve efficiencies. I don't think it will be a sellable product in and of itself. People think, well, ChatGPT will write your paper for you. Even that isn't going to pay anybody. And schools are going to adjust how they deal with that academically. I mean, there's just going to be various adjustments. I think that's kind of the story of the internet. A few big winners, a ton of losers, a ton of hype, and then more or less a, over time, major change in a lot of the way we live our lives, but not necessarily one that you could look back and say, well, this was like a gold rush. It really wasn't when all said and done. And that's fascinating. At the end of the day, I think AI is going to end up doing certain things people didn't think it could do. They're more skeptical. But I think there's a bunch of things people think it can do that it's never going to do.
Do you think that conversely, the kind of fear that we seem to have, or some people seem to have about AI, that, you know, it conjures these images of like Skynet and the Terminator movies or something,
right,
that like similarly overblown, right? So we're maybe the upside and the downside of it are being so greatly overstated that people are missing the ways that it actually is going to have applications. Because I think about it too when I hear, and perhaps this is the question I should ask you, but the impact that you think it might have on jobs and employment within the marketing communication space that I'm in. I go to conferences and I hear a lot of conversations. I do hear from people who think like, is this going to take our jobs entirely? And I've played around with it enough to know that there are things for which it is useful, like, some base copywriting stuff that I'll just go in and edit rather than being the author of the original copy first, and then I just customize it as I needed. Like, I still have to write a prompt that is going to give me back the information that's going to be useful. And then I have to tweak what it gives me. And it takes time also for it to continue to interact back and forth with an established account that you've created with like a ChatGPT, for it to start to learn some of the intricacies of the kind of language you use and the way that your organization speaks. So I find a lot of the panic about it just to be, so incredibly overblown.
Because it is. And we have testimony of history here that I don't understand why people don't want to learn from. There's two categories of things. There are things that legitimately AI will make easier and therefore limit need for human involvement. Well, that's obviously not new from both the Industrial Revolution and the Digital Revolution. And the Digital Revolution did not start 2 years ago with AI, and it did not even start 15 years ago with cloud, and it did not even start 25 years ago with the internet. But the advent of personal computing, the entire typewriter industry became obsolete, and everyone who worked in typewriters found new jobs, and probably very similar. Maybe they went to selling PCs. Maybe they went, to be back-end repair. Instead of repairing that, they're repairing this. The adjustment may not have been categorical, but there was not just creative destruction, but just natural evolution. And it always resulted in net new jobs, an increase in net jobs, not a decrease. Now, there is a sense in which there can be pain along the way in certain segments and sectors. I think that could happen. But like even the example you brought up about there's certain things that generative AI will now write for us. And so a person who is getting paid to be a ghostwriter may not be necessarily a copywriter, let's say. But yeah, that's not going out without proofing, editing, checking, correcting, graphic implementation. There's all different components of it. And so there will be an adjustment, and markets adjust pretty quickly and pretty spontaneously. But then there's the other aspect where it's more dystopian fears. And Elon Musk has done a lot to kind of worry about this, and he's so smart and so knowledgeable that a lot of people think, well, he may know things I don't know what's going on out there. And I watched this debate he had the other night with Jack Ma. The debate was from several years ago, but I watched it the other night. But Jack Ma, the founder of Alibaba, was saying it almost sounded, dare I say, like Christian anthropology, like really touting the things that human beings can never be disintermediated from, that no machine will ever be able to do, and all machines will always and forever be limited by the humans that program machines, which is certainly my view. And Musk just laughing and grinning and shaking his head no, that no, machines can and will, be able to do all kinds of very creepy things that humans don't allow. I think anthropology is very important here. I'm all for things machines can do to make our life easier. I'm trying my very best not to eat a lot of fast food these days, but I will say that I don't think the biggest impact of kiosks at fast food restaurants have been that they've disintermediated workers. I think they've also been proven to be better for customers, not worse. I think customers like it better. There's less mistakes being made with that. So yeah, machines driving efficiency in the economy is as old as the steam engine, or the wheel for that matter. What it was Milton Friedman's famous line. The purpose of this stuff is not to employ people. If it was, we'd get rid of all tools and just use a spoon to dig holes and so forth. We don't need a tractor. A spoon would do it. You'd employ a lot of people. I think that the Acton Institute's view of the human person becomes very important here. I think virtue is extremely important in the marketplace. AI doesn't touch it. I think that relational and social dynamics that are at the heart of the human person matter a great deal. Very, very few businesses have no real human component, are so commoditized to the point that humanity is unimportant. My business is entirely human-driven. So I lived through in the 90s people saying low-cost trading would disintermediate financial advice. It most certainly didn't. We lived through this period. People don't even remember. It was the ancient history of like 7 years ago. They thought robo-advisor, that died very, very quickly. We set hundreds of billions of dollars on fire all the time, believing that there's some new trick coming that's going to disintermediate human beings. Already lawyers have gotten sued for trying to use AI, and then they delivered a brief, and it turned out the brief was wrong.
Citing cases that don't exist. And yeah.
And so it's funny. I feel like a dinosaur. I'm 50 now since we last were together. I've turned 50. I look at ChatGPT. Everyone comes to me with ChatGPT going, "Can you believe what it does?" And I look at it and I just think it's like a little bit better Wikipedia. It just doesn't blow me away that much.
It's like a combination of that and a search engine, right? So there are
right.
there are things that you would previously Google, and if it were a direct question, you would have to sift through the responses that you got for it. Whereas, like, if I'm just Googling like where this business is, I'm going to get a return on that very quickly. But you can ask ChatGPT questions, and it will draw in from many sources, Wikipedia being among them, and try to give you an answer to the question, which is an evolution in the search functionality, and it is often helpful, at least in the cases where you're not getting incorrect information or invented information. I think the thing that is, I notice most about the AI stories is why I can't buy into the dystopian part of it is so much of it is so funny. Like some of the responses you get are so bad. The generative stuff, especially the image or video-based generative stuff. Like there was this one from a year or two ago of, I think it was Will Smith eating spaghetti. That is like David Cronenberg level dystopian, like sci-fi horror kind of stuff. Not the kind of thing that is going to really fool a whole lot of people. But then there are thoughts about like where, what are going to be the ethics around the utilization of this technology? Because I just noted, I'll have it do some base copywriting for me. But then, I'm going to go in and edit it, and I'm going to have two other people look at it, and it's still going to be shaped. It's not all that different than if I had a stringer doing the original copywriting and then moved it into the same editorial process. But you mentioned like colleges and universities, lawyers, and all of that. Do you think we could get away from that pretty quickly? Because, you hear one story about a lawyer submitting a brief that cites cases that doesn't exist, and you got to think that puts the fear of God in most attorneys that you're not going to be able to get away with this. But
how badly is a lawyer looking to not have to write their own brief? For which they are paid $850 an hour to write, that they are willing to risk getting disbarred because the modern version of Ask Jeeves writes the brief wrongly. I mean, that kind of career risk, most attorneys have a better risk reward inner calibration than that.
If your attorney doesn't have that good of a risk reward calibration, then you probably hired the wrong attorney.
That's right. And I go to conferences in wealth management and portfolio management all the time where you hear, because these people putting on conferences and your custodians and asset managers and strategic partners are kind of paid to sound hip and new and contemporary, and they just talk over and over about all the different things with AI and so forth. And I'm one who is paying millions of dollars a year for the cost of running a real portfolio management firm, and I haven't put a dollar into AI disintermediating my people. The idea of me replacing human being research analyst that can listen to a CFO, ask questions, and process intent and process context, that I would want to replace that with a language learning model is crazy. But of course I would want to do it if I was convinced it would be effective cost-wise. I'm so convinced it isn't effective cost-wise. And so that's why I think the lawyers are going to go through that. There will be plenty of areas where it is effective cost-wise, that there will be some benefits, but I don't think we know yet where they are. And then to your point about the ethics of it all, we do have to have that conversation, and we're going to have it about ethics, but we're also going to end up having to have it about regulation. And you get like 2 more videos getting out there where it looks like Joe Biden's fallen over and they say that AI did it and it wasn't really him. I think you're going to start getting all kinds of governmental restrictions on generative AI. But we're still kind of in the early innings of a discussion on ethics of social media, of mobile phone, smartphone dynamics. The schools are right now, in a way, like Jonathan Haidt's work on the phone stuff. It could have happened 5 years ago, 10 years ago, but it didn't. It's happening now. And so you could argue we're just now getting serious about some ethical discussions around kids and phones. But the phones came out 15 years ago, more than 15 years ago. So the ethical implications of AI, that's going to take a long time to play out. And it will need to happen. But again, I'm not trying to be overly Hayekian here, but I do think the Hayekian principles are right. There will be a spontaneous adjustment in the marketplace, in the regulatory apparatus, and to some degree in the kind of ethical ways that we think through all this stuff as a society. And it will adjust. And those that are worried about robots taking over the world, I think it lacks history, and I think it lacks worldview.
I think in just general, I'm against most forms of doomerism, but since you mentioned social media, when I hear those conversations, as somebody who's worked pretty intimately in the digital marketing space with social media, building communities there, I've seen both what it is good for, I've seen what it is not good for, what it can't really replicate. And when I hear the conversations about regulation and the negative effects of social media, like the thing that I'm reminded of is like you make the point about phones being around for 15 years and we're only just having this conversation about them in schools and people's relationships with them. We just haven't lived with this stuff very long.
Yeah.
We seem to be such an impatient society that once we have identified that we think this thing is a problem, there needs to be a fix to it immediately. And the answer to a lot of it is like, we're going to adjust to living with it in ways that we probably can't foresee, but it's going to take some time. And like coming back to something you'd mentioned, earlier, some of these communities, these transitions that happen when industries change, you could put Youngstown, Ohio, and places like that that have largely been devastated over a period of time. But it's a process of change. So the last question I'll ask you is, what should we be thinking about? What should we be doing in these market sectors? Again, these are people living in physical places, working in factories or in physical buildings. The industry's changing around them. The answer that I just gave about social media doesn't really mean a whole lot to someone who has lost their job because of the changes in the economy. What should we be thinking about? How should we be approaching people like that, people who need help in a short-term period of time as we continue to let market forces drive the changes in our economy that are going to yield whatever the next big thing is that we can't predict as what it will be?
Yeah, and necessarily I have to answer in the macro, not the micro, because if you were to say, David, what should we be doing about my friend Billy, who's in this town and knows these people and has this training, but lost his job because of this,
Yep.
and then there's a specific context and specific set of circumstances that probably do have certain best practices and advice and particulars, and maybe I might have good things to say to it, or maybe someone else might, but they're particular. And yet really all that we can do without talking about Billy and Jenny is in the macro. And in the macro, it has to be an obsessive commitment to dynamism, to economic growth as a moral cause where there is a significant amount of mobility. The thing with the Youngstown, Ohios of the world, I think there were paradigmatic shifts in trade and in technology, and that a lot of people were hurt by it. And some towns were hurt more than others when the same thing happened. And oftentimes there is mediating institutional explanations from churches, the religiosity of the town, the schooling of the town.
All of Tim Carney's work
all of that
in
type of
Alienated
stuff.
America, yeah.
Very much. And it's kind of undeniable, but I don't say it without empathy for where there have been difficulties. But I do believe that sometimes someone's got to move. That's the right thing to do for them, their family. And I think we continue to have a lot of the conversation on the left and the right, a little dishonestly, that like, well, if we can get this policy thing right, if we can get the right tariff with China, all those jobs come back to Ohio.
It's back to the one weird trick will fix everything kind of. Yeah.
And it's not just wrong because it's untrue and bad policy and has trade-offs and other things like that. It's also wrong because then when it doesn't happen, which inevitably doesn't, the solution people look for is more statism. They're not going to go, oh, wow, this thing didn't end up happening the way we wanted. Let's double down on more freedom or more open, laissez-faire economic solution. It doesn't go that way. I think that retraining a very honest, open, economic focus, these companies providing technological training, it's a wonderful thing. The fact of the matter is that you can't really answer your question with just one thing. It's not merely economic. I mean, it invites a huge critique of higher education. It invites a huge critique of the student loan market. It invites a critique of why so many people, K through 12, are incapable of thinking holistically as human beings. And, do I want to see a greater embrace of trade schools? I do. But even like you go back to my book, Full-Time, Work and the Meaning of Life, making a theological case for dignity in work. Part of the problem right now why everyone needs a big STEM job or a big corner office job is not because they're all doing the right thing to focus on careerism. They've bought into that it's either a socioeconomic strata that matters in work, or it's awful and we hate it and we resent it. Where my point, with a better theological foundation that is rooted to the right anthropology of work, we wouldn't have this thumbing our noses at trade school, at electricians, at plumbers, at engineers, at trades of that nature. And that a lot of work is coming into those spaces. And a lot of people in America don't want those jobs. But I think that could change if we didn't have this notion that the only guys girls like at the bar are lawyers. This whole thing of who's the cool kid, the popular person, what have you. Finding meaning in all these different aspects of service to mankind needs a rethinking vocationally. There's a lot that needs to be done, but on the macro, my focus would still be on a private sector that represents a portion of economy that is far greater than it is. And really all I said is a governmental sector that plays a lesser role in the economy than it does. 16 to 20% of GDP has been a norm that has worked reasonably well. I can't answer exactly why I think it should be 16, 17% of GDP, but I think there's a big cost to having a military and defense and a government that meets a limited amount of function under our constitutional order. 25% of GDP that it is now is obviously crowding out the private sector in a way that is hurting Youngstown, Ohio, and hurting big cities. It's hurting upper-end jobs and lower-end jobs. It's hurting American competitiveness. So if we fix that, we fix so many other things along the way.
David Bahnsen, thanks so much for joining us today on Acton Line.
Thanks so much for having me, Eric.
As always, thank you for listening. Our team loves putting this podcast together for you. It's encouraging to hear from our listeners. Feedback is incredibly important to us because it lets us know what you'd like to hear more of, including the kinds of topics you're interested in most. If you have comments, feedback, or ideas for a show topic or interesting guest, you can email our team at producer@acton.org. Until next week, for Acton Line, I'm Eric Kohn.